Some much-needed relief today for Aussie homeowners and borrowers, of course, with the Reserve Bank holding interest rates at 4.1%. But the RBA has warned we're not out of the woods yet, saying further tightening may be required to contain inflation. Despite the welcome relief, some Aussies are still struggling.
It's getting beyond ridiculous for the cost of living for the average person on the street.
Slow it down a bit. Take a breath.
I'd love to own a home, but I don't think it's something I can do right now or any time in the near future.
Well, joining us now is former RBA economist Callum Pickering. Callum, the RBA left interest rates on hold today. Why do you think they decided to throw us a bone?
Well, the main reason is simply because we are beginning to see signs that monetary policy is beginning to work. After 12 months, a ton of mortgage pain, the economy is finally doing what the RBA wants it to do. We've seen inflation come down to 5.6%, still too high, but certainly much better than the 7% rate we had earlier this year. And we're also seeing a few wobbles in the retail sector as well, with households beginning to change their behaviour in response to higher rates and cost of living pressures.
So they did pause today, Callum, but they left the door open for more interest rate rises. So is today's decision, you think, just a temporary stay of execution?
It's certainly possible. The RBA anticipates that further rate hikes may very well be necessary to contain the current inflation outbreak. And given that inflation is too high and the labour market is roughly as tight as we've seen in the past half century, it's difficult to disagree with that assessment. So on the balance of probabilities, you would expect the RBA to raise rates again at some point over the next few months.
Mortgage stress is already at its highest levels in 15 years. When do you think homeowners can expect interest rates to start falling then?
Well, that's the billion-dollar question. And I think if I had a firm answer to that one, I certainly wouldn't be an economist.
What would you be,
I will say this, though.
What would you be?
Oh, there's so many better possibilities than economists, but here I am.
Do you know what? I think a lot of Australia agrees with you.
I will say this, though, with regards to rate cuts. We need to be careful what we wish for, because if rate cuts are delivered this year or next year, then there's an awfully good chance that something's gone terribly wrong in the economy. Because, of course, we cut rates when the economy is doing pretty poorly. And right now we have a pretty strong economy, which is why we're raising rates. But if it was to shift really quickly and we had to cut rates quite suddenly, then we'd be looking at something like a downturn or a recession. So while mortgage relief would be welcomed by a lot of people, it certainly comes with a bit of a caveat in regards to a downturn or recession, and they're reacting out accordingly.
We thank you for your analysis tonight, Callum. Thanks for joining us.
Thank you.